Hello, good morning, ladies and gentlemen. Hello, good morning, ladies and gentlemen. So, can we please confirm that we are good to go this morning? If you can hear me and can see my screen, kindly give me positive feedbacks in that regard so that we can kickstart the session, please. I hope Dele is in the house. Okay. If you can see my screen and you can hear my voice, I want to assume that we are good to go this morning. From all indications from my hand, it appears that everything is okay here from my side. And okay, um, I want to assume that we are good to go this morning. So, welcoming you to another promising session on my morning live show. And as usual, this morning we are going to be doing a follow up detail as we review all the instruments that I published during the course of the weekend. And at this point in time, we have been having some positive positions on some of the pairs, though we have some pairs that are still doing consolidation phases as a result of um, the CPI yesterday. And talking about the CPI, I was able to do a summary of the fundamentals that happened yesterday, and this will also be giving us an insight into what is really happening in the market and whatever structure we see in the market presently was going to be as a result of these fundamentals. So, in that regard, I would like to share with you what I was able to spool out so that we can have a better perspective into what is really going on in this market. So, let's quickly run through the fundamentals. And at the beginning of the week, we received these shock waves from the SVP Bank, that's the Silicon Valley Banks collapse, which has triggered big moves in the bank shares as investors panicked over the financial health of banks in the US. Despite assurances from the US president and other global policymakers. So this is another dilemma for the US Federal Reserve, whose fight against inflation has been complicated by the collapse of two regional banks. Then yesterday as well, we anticipated the consumer price index, and in fact we had a positive variance yesterday as it rose about 0.4% last month after accelerating about 0.5% in January. In the last 12 months, the CPI increased 6.0%, which is at a slower pace than the 6.4% annualized gain in the month of January, but still far off the Fed's 2% target. We all know that the inflation target for the Fed is 2%, and currently inflation is running at around approximately 6%, which is not something positive, and this will definitely be bringing the tendency of a rate hike coming into fruition. And with more than a week to go until the next FOMC meeting, a 25 basis point rate hike is still a distinct possibility, as the latest development indicates is in financial stress. So we're still expecting the rate hike, but it might not be as high as the 50 basis point which majority were actually expecting at the beginning of last week. And following the latest development in the market, things might the rate hike might drop a little further, but we are definitely going to be having a rate hike in the next week. So we are also going to be looking forward to that, and majority in the market will definitely want to be looking forward to that. And investment buying or selling of the US dollar at this point might likely be witnessing a lot of consolidation phase as we head into the later part of this week, as we anticipate this FOMC meeting coming up next week. So with that being said, here with this information we have gathered here, let's dive into the current market structure in order to decipher what our next line of action will be based on the current market structure. So with that being said, let's dive into the chart, and the first commodity we are going to be looking at this morning, as usual, is the US oil. And if we look at the current structure on the US oil, you would notice that price action has been bearish since the beginning of this week, and in fact price has continued to find lower lows and lower highs, which has led into a significant breakdown of that demand platform we identified at around the $72.50 level. Now, how did the week started for us here? Well, we initially had a situation here where we had an initial bullish gap at the beginning of the week, which led into a situation where price action was caught within a consolidation phase. Around we had a $77.20 area was the resistant line for the channel, and the support line for the channel fell at around the $76.50 level. And you all know what we look out for whenever we have this kind of situation here is to place our buy stop order above the channel or sell stop below the channel, wait for a signal to come in the form of either a breakout or breakdown of the channel for trading opportunities. And what exactly happened during the UK session on Monday was the significant breakdown of that $76.50 level, which triggered our sell position in this market. And since then, price action has been finding lower lows and lower highs. On that same day, we were able to add more position to our existing trade, as we were able to scoop over 600 pips as price action hit our TP target at the $72.50 level. Now, during the course of the live session yesterday, we were around here. Hold on a second, let me figure that out. So we were around the $73.85 level here, where we were able to identify a simple setup around that area, looking out for more selling opportunities in this market. I don't know what happened this morning. The setup I identified there yesterday, I couldn't find it again this morning when I came to my chart. Probably I must have mistakenly tampered with it. So we actually had a setup here, but I think we can get that on my public platform, the Trading View. I think we can see that clearly there since we had it published. Okay, so yesterday is on the 14th. Okay, so I will be zooming down into the 14th. All right, so this is where we were during the live session yesterday. I shared this publication, I think half an hour before the live session, where we identified a simple setup here between the $74.30 level and the $73.80 area, and we were looking forward to a breakout or breakdown of the structure for trading opportunities. And at the same time, we had this bearish trend line figured out, and we said we shall be using the bearish trend line to decipher what our next line of action will be for yesterday. And as long as price remained below the bearish trend line, we said we shall keep hold on to our bearish bias. But if a breakout of the trend line happens, then we shall be anticipating a momentum shift. And this is what we saw during the UK session yesterday. We saw the breakdown of the $73.80 level as price action moved significantly in our favor before we started seeing some bullish momentum come in 5 minutes into the CPI event yesterday, taking us out of some positions there, and we were looking forward to another wave of bullish momentum if price action does break out of the structure. So we had the breakout of the trend line here, and we added some position for buying opportunity, but as at this morning we were taken out of that position as we had a sell stop order below the $72.50 level triggered. And this is what we have this morning. We saw price action back into the entry point at the $72.50 level. We're still right within the ambit of that bearish trend line here, and we might likely be looking forward to another wave of bearish momentum today. And so going into the UK and the New York session today, what are we going to be looking out for? What are the expectations, and what structures or parameters are we going to be using to guide our trading activity for today? Well, since we already had the significant breakdown of that important demand zone at the $72.50 level, this is more or less a beautiful signal that we might be going bearish. And talking about the $72.50 level, I think it's appropriate here that I share with you how important that structure is on a much more higher time frame, so that we can have a better perspective into what is really going on here. So this is the 4 hours time frame on the US oil, and we had the situation figured out here where price action was caught within a supply and demand zone. We had the supply area at the $80 level, $80 zone rather, and we have the demand zone at around the $73.50 level. So the lowest point for the demand zone was sitting at the $72.50 area, which was finally broken during the course of yesterday's trading session. And you all know from a technical standpoint, whenever we do have a breakdown of structure like this, we expect at one point in time price is likely going to come back to do a retest of that structure in anticipation of another wave of bearish momentum to the downside. Now, will this situation hold here? We cannot just jump into conclusion at this point, because one thing that could happen here is that the bearish trend line that broke down the demand zone here could actually turn out to be a false breakdown. And if it turns out to be a false breakdown, we might likely see a situation where price climbs up above the $72.50 level, breaking out of that bearish trend line that has been guiding selling pressure since the beginning of the week to incite another wave of bullish momentum. So we need to be very careful at this point, as we need to see how price action will be reacting to the $72.50 level, a level which was broken during the course of yesterday's trading session, to decide what our next line of action will be. Now, with the information we have right here, I hope you now understand the importance of the $72.50 level based on this current market structure. So going back down into the 1 hour time frame, we want to have a better understanding into how price action will be reacting to that $72.50 level that was broken yesterday to the downside, to give us a clue of what our expectation will be. Obviously, for today's trading session as well, just like the couple of days before today, we are going to be using the bearish trend line here to guide our trading activity for today. As you can see, the trend line has consistently been respected in the last couple of days now, and we might likely see price action retest that structure one more time to drive price action to the downside. So we are at a major confluence right now. We are at the $72.50 level, and the bearish trend line shares a beautiful confluence. So now what happens here? What are we looking out for around this area? So like I said, on the higher time frame, we might likely see price action break out of the trend line and the $72.50 level to find buy pressure above the structure to incite another wave of bullish momentum here. Remember, we are still within that strong demand zone that we identified earlier. So what we are going to be doing at this point is to understand the consolidation phase that happened here. That is, since price action came back into that $72.50 level, we want to see how price action has been reacting to the structure here in the last 4 to 5 hours to decide what our next line of action will be. So to be able to understand what is really going on here, we want to be scaling down to a much more lower time frame. We can use the 15 minutes time frame or the 10 minutes time frame, whichever one, but let's go into the 15 minutes time frame to see what is really going on around the structure. So here we are on the 15 minutes time frame, and if you look at what has been happening here since the beginning of this morning, you will see that we have a flat channel already identified at this current structure. So what I will be doing right now, hold on a second, I don't want this to so I want to, okay, I want to make this visible. Okay, so when we go back down to our 15 minutes time frame, all right, so it makes the charts more cleaner right here. So the next thing we want to be doing now is to bring out our line chart so that we can have a specific point of connection. So we shall be using this resistant line here. So we have a structure at the $72.50 level, I guess. Okay, let's label this area for the sake of clarity. So $72.50 level, and we place it at the top right hand side of our screen. And let me give this a black color, so let me make it darker. Alright, so we have that figured out here. Then we should be identifying the support line too as well, which falls at around this area, falls at around the $72.20 level. Okay, so we have $72.20, place at the bottom. Alright, so we have a flat channel figured out at this point. So this is going to be the yardstick for our trading activity for today. Now, how are we going to be making use of the structure? Well, you all know what we look out for whenever we have this kind of flat channel. We need to be very, very patient. Look out for either a breakout of the channel or a breakdown to give us an opportunity to trade. Now, with the situation that happens here, you can see how this flat channel has shared the beautiful confluence with our bearish trend line, which makes our job a lot more easier during the trading session today. So what we are going to be looking forward to at this point is either a breakout of the $72.50 level, which happens to be the resistant line of that channel, to incite a trend continuation to the upside. So that is the first scenario we are going to be looking forward to here based on this current structure. Then the other possible thing that could happen here is if price action breaks down the $72.20 level, followed by selling pressure below the structure on our lower time frame, it will definitely welcome a sell position in this market. And if you are still in the sell position in this market, this will definitely be another opportunity for you to add more position to the existing trade. So these are the views that we shall be looking out for at this point. And in fact, if price action drops below the $72.50 level, as long as price remain below that structure and at the same time below the bearish trend line, we shall feel comfortable in our bearish momentum. And one thing about this current structure, based on what has been happening since the beginning of the week, following this impulsive move that broke down that demand zone here yesterday, we might likely be seeing this as a retracement back into the trend line to incite another wave of bearish momentum to the downside. So this is a theoretical fact here. So I will be leaning towards price action doing a breakdown of the $72.20 level, which happens to be the support line of this channel, to decipher what our next line of to decipher if we are going to be selling. So we should be having a sell stop order below that structure, with a stop loss right around the $72.75 area or above the $72.50 level to protect our portfolio. Now, if it so happens that price action does break out of the $72.50 level, then definitely we want to be anticipating a buy position here. So a breakout retest of the structure in our lower time frame is going to be a beautiful opportunity for us to join that rally to the upside. And remember, above the $72.50 level has always been a strong demand zone in the past, and a breakout of that level followed by buying pressure above that structure will definitely be a very good opportunity to join that rally to the upside, as the trend line here will no longer have the capacity to continue to hold that bearish momentum to the downside. So this is what we shall be looking forward to for today. And if you have questions, feel free to drop your inquiries in the comment section. And if there are any surprises, as usual, I will be jumping in the comment section on my TradingView platform to give you an update on what my expectations are based on the surprising structure that we may later find during the later part of the day. Okay, so that is that on the US oil here. If you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we shall be looking at today is going to be the GBPUSD. And what do we have on the GBPUSD? So in the last 60 hours now, we are still having our buy position running. Remember, we took advantage of this bullish momentum here at the beginning of the week after buying above the 1.20750. In fact, we have two positions running on the GBPUSD. We also had a buy stop order above the resistance line at the 1.21050 level, and we had that second position triggered there. And since that day, price has been trading above the 1.21450 level. So it's more obvious that we have been seeing buy pressure around this area, which appears to be a niche for buying power since the beginning of this week. And remember that we had our stop loss somewhere right below the 1.21400 yesterday, and price is actually yet to break down that structure to take us out of the current buy position. And with the current situation we have here, and considering the fact that price continued to trade between the 1.2200 level and the 1.21450 in the last 48 hours, it's a beautiful signal that there is an indecision in this market, as participants are not yet sure where price action is likely going to be going in the nearest future. And with the situation we have here, if we look closely into that structure, you can see that despite the fact that we have a consolidation phase around that area, it's more or less going bearish. As we can see, we have lower highs here in the last 24 hours in this market, hereby giving us a beautiful bearish trend line, which we shall be using to guide trading activity for today. So to further emphasize the importance of this trend line, I would like to thicken it a little bit so that we can see its importance based on this current structure. So let me give it a red color here. And one thing about this trend line for today is that it's going to be part of the parameters we shall be using to guide our trading activity for today. Now, how are we going to be using the structure for today? Remember, we still have our stop loss somewhere right below the 1.21400 level. We are yet to be taken out of this position right now, as we have our buy position still running. But there is a high chance that we might be seeing a selling opportunity in this market. As you can see here, the bullish trend line, remember we identified this trend line here at the beginning of this week, and since price action broke above this trend line here on Friday, you can see that price has continued to trade above this trend line to further emphasize the strength of the buyers in this market. And we were part of this momentum anyways. But one thing has happened here in the last 4 to 5 hours. Something significant happened, as we saw the first time price action is breaking down that bullish trend line here in the last 4 to 5 days. Now this is the first time it has broken that bullish trend line. So this is a sign that we might likely be seeing a selling momentum coming in anytime soon. And coupled with the fact that we have lower highs here, it further buttresses this structure. But one thing we want to be seeing here before joining any selling momentum in this market is to see price action break down the 1.21450 level, taking out all the buy positions here, then giving us some liquidity which shall be reflected on the chart in the form of a retest of the 1.21450 level, rejection of that area on our lower time frame. Then it will give us a confirmation to join that decline to the downside. And if a further breakdown of the 1.21050 level happens, we want to be adding more position to our existing trade. So this is the set scenario we are going to be looking out for to sell the GBPUSD for today. So I hope that we'll be on standby to catch this opportunity. You might also want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. Now, with this bearish expectation figured out at this point, we cannot ignore the potential of a bullish momentum happening in this market. Remember that we have been on a bullish momentum in the last 4 days now, and we have a very strong structure at the 1.21450 level, which has been a strong buying niche since the beginning of this week. And if the buy pressure around this area continues, probably into the UK or the New York session today, we might likely see price action take out that bearish trend line. And if that happens, we might likely be seeing a bullish momentum in that regard. But remember that we cannot join just right away at that point if price action breaks out of that trend line, because of the fact that we have been witnessing selling pressure below the 1.2200 level since the beginning of this week. And considering the sell pressure we have been witnessing around this area, it is more important for us to remain patient around the structure to look out for further confirmations that will be supporting a bullish momentum. So for me to be joining any bullish momentum here, even if a breakout of the structure happened, that is the bearish trend line, we want to see some confirmations, probably in the form of a retest of the trend line or the retest of the 1.21450 level by pressure on our lower time frame, after which we can join the trend continuation to the upside, with a stop loss sitting somewhere right below the structure, around below the 1.21400 level, to protect our portfolio. Then if price action goes on to break out of the 1.2200 level, then that will be welcoming additional position to our existing buy position on the GBPUSD. So because if a breakout of the 1.2200 level happens, then price action would have taken out all the sell position around this area to give us that leverage to join that rally to the upside. So these are my views here on the GBPUSD for today. So I hope that we'll be on standby to catch these opportunities when they finally happen. If you have questions, you need me to do some further clarification on what I just explained so far, feel free to drop your inquiries in the comment section. So moving on, we shall be taking on the XAUUSD, and on the XAUUSD already, we're already in a sell position. We have been in a sell position here in the last 24 hours. Where were we during the live session yesterday? We were around here. During the live session yesterday, this was where we were, and I think, yes, during the live session yesterday, we had the sell stop of this position triggered during the live session yesterday, and it took and since then price action has been trading. In fact, the most part of yesterday's trading session, we were trading in a loss zone here. Price was still didn't take us out of our position, as we had our stop loss above the resistance line at the 1915. And not until during the early hours of today that we saw price action come back into the profit territory here, and since then price has been trading to the downside. So if you are part of this trading opportunity, well done to you for being on standby, as you will currently be running with over 1,400 pips in profit. Now, with the situation we have here, price action running in our favor, the next thing we want to be doing now is to secure this current position by moving our stop loss accordingly, and I will be advising us to move our stop loss to somewhere right around the 1904 level. For me, at this particular point in time, I've not yet seen myself making profit on this one, as this is still around and within the area where we entered this position. So we still need some more momentum in this market that will further emphasize the strength of the sellers at this point. And now with the breakdown of the 1895 level happening here in this current hour, we need to be very careful, as we need some other confirmation for us to add more position to this existing trade. So with the situation we have here, we already have the 1895 level breach to the downside. So I want to see some retest of structure on my lower time frame to be able to join another wave of bearish momentum to the downside to add more position to my existing trade. And in fact, I shared this update this morning on my public platform, my trading view platform, and this was what I said here this morning. Okay, before I went to bed yesterday, I shared something. I said sell position still running in a loss as buy pressure resumes above the 1904. And you all know that we can't buy yet. We can add more buy positions to this trade because we need the breakout of the 1915 level to happen before we could be buying. So price action didn't even get close to that resistant line at all in the last 24 hours. Now, as of this morning, I woke up this morning to see my chart, and I can see that price action has been trading in the positive territory at this point. So I told us all the sell positions still running and back into the profit zone after running in a loss in the last 24 hours. So the newly identified bearish trend line will serve as a yardstick for trading activities for today. So what I'm simply saying right here now, going into the UK and the New York session today, we have a simple structure we are going to be using to guide trading activity for today, and that is the bearish trend line here. So if we connected the series of lower highs here in the last 24 hours, you will see that the bearish momentum is gradually gaining traction in this regard. So we want to see price action continue to trade below the bearish trend line for us to feel comfortable in our sell position at this point. So let's see how price action plays out on this one. Remember, we also have this trend line here where we need to see how price action will be reacting to the structure to decide if we are going to be adding more position to our sell position here, or we might be getting ready to join a bullish momentum to the upside. But be rest assured that I will be jumping in the comment section of this publication on my TradingView platform to give you an update on what my expectations are. But one thing I would like to state here is that as soon as price gets into that trend line, what we want to be doing is to move our stop loss to somewhere around the 1895. You know, currently our stop loss should be around the 1904 level. So if price action gets into the trend line, we move our stop loss to somewhere around the 1895 area with the hopes that price action will continue to the downside. Now, in as much as we look out for selling opportunities in this market, like I always say, it's very important, it's very necessary that the market is very fluid, and as traders, to want to make money from the market, we need to be as fluid as the market is. So if we have a perspective earlier and perspectives start changing, definitely we want to be anticipating and preparing to be part of that momentum shift as well. So in this kind of situation that we are looking forward to selling opportunities in this market, we cannot but consider the possibilities of buyers coming in at this point. And remember, it has been a bullish momentum for a while now, and we already have a bullish trend line in that regard to further emphasize the strength of the buyers in this particular market. So there is a high chance that we could be seeing some bullish momentum too. So what are we going to be looking out for if we want to be joining a bullish momentum in this market? So in this situation here, we want to see price action climb up. That is, climb up, take us out of all our sell positions here, then breach this bearish trend line to give us a confirmation that bullish momentum has come to stay. But one thing about this current structure is the fact that we are not going to be joining right away, just like we are going to be doing on the GBPUSD. We are not going to be jumping right away, as we need further confirmations to happen for us to be sure and confident that we want to be joining a bullish momentum. Remember, in the last 36 hours here, price action has been bearish. As you can see, out the 1915 level rejected all attempt by the buyers to break out of that structure, and this has led into price action finding lower highs, as we have a bearish trend line to emphasize that. So we want to see price action take out the sell positions there, but wait for price action to give us further confirmation in the form of a retest of structure. It could be the retest of the trend line or the retest of the 1904 level. Look out for buying pressure above the structure on our lower time frame, after which we can join a bullish momentum to the upside. Then a further breakout of the 1915 level will definitely welcome additional position in that regard. So these are my views here on the XAUUSD for today. So we remain bearish in that regard. Price action continues to trade below the bearish trend line and the 1904 level. We shall feel comfortable in our buy position. So let's hope that price action will continue to the downside, and I hope to see you at the other side on my TradingView platform as we continue to monitor price action. If you have questions, feel free to drop your enquiries in the comment section as we go on to trade the last pair for today. So the last pair we are going to be trading for today is the USDJPY, and in fact since yesterday we have been quite profitable on the USDJPY, though the momentum isn't really that strong yet, as price action has been trading above the 134.00 level, that very important key structure that we identified in the video I published during the weekend. So if you are not yet watched my video, please watch it so that you can have a better understanding of how we got to this current market structure and why we are making the decision that we are making right now. So during the live session yesterday, we were around here during the live session yesterday, and we saw this engulfing candle, which further gave us a signal that the bullish trend line here will be a yardstick for our trading activity for yesterday. So we identified this bullish trend line yesterday, and we said as long as price remain above this bullish trend line, we shall feel comfortable in our buy position. And after the buy position here was triggered here, we had our stop loss back into our entry point, and since then price is here to take us out of our position. As you can see, price has been trading above this level. Then during the early hours of today, I was able to identify a simple structure here at the 134.700 after noticing selling pressure around that area. And if we go to as far back as the beginning of this week, that was on Monday, we saw how the same level also was serving as a selling niche. We saw what happened here during the New York session yesterday. It was also serving as a strong selling niche. And during this morning, I shared on my public platform that we need to see a breakout retest of the 134.700 level to add more position to our buy position here. So for the sake of clarity, I would like to show you the update I made this morning on the USDJPY, and this is what we saw here. Okay, this was this morning. So I shared this. I said buying pressure continues as secure position as we look forward to more buy opportunities at the breakout retest of the 134.700 level. And it appears price action is currently trading above the 134.700 level. But one thing that is making me a little bit doubtful about this current structure is the fact that price action coming back into the resistant line for the week. Remember, this is our resistant line for this week. That is the highest point price has ever been for this week, and that is the 135.100 level. And looking at selling pressure resuming again around this area, it makes me very doubtful of this bullish momentum at this point. But if we are taking this bullish trend line into consideration, I want to do some readjustment to this trend line as to suit on the current structure on the market, as you can see here. So this trend line here is still going to be serving as a yardstick for our trading activity for today, as we shall feel comfortable in our buy position as long as price remain above this bullish trend line. So in as much as we're seeing some selling pressure around this area, I'm hoping that price action will reverse back to the upside maybe, but if it doesn't, then we get stopped out in this position. We have a stop loss of about 40 pips there about here, so it's okay, around 40 pips here. And for this buy position, the first one we took advantage of here on Tuesday, we already move our stop loss to somewhere right around the 134.250 area to secure that position. So let's see how price action plays out. It's a risk worth taking anyways. Let's continue to monitor this and hope that price action will find higher highs, breaking out of the 135.100 level for additional position on this trade. So in as much as we continue to look out for buying pressure, buying opportunities here, we should also take into consideration the fact that if price action respects this resistance point one more time, are we likely going to be seeing a sell momentum in this market? Well, our bullish trend line, which is serving as the yardstick, will be giving us a clue into how to go about that. So what we are going to be seeing here for us to know that a selling momentum is going to be coming in is to see price action break down that bullish trend line. So if it so happens that price action breaks down the bullish trend line here, then at this point we have realized that the trend line is no longer strong enough to hold that bullish momentum. And if this happens, remember, we are not joining right away, as we need some confirmations to happen on our lower time frame for us to be able to join that decline. And one thing I would like to see here, in fact, I would like to see price action drop below the 134.700 level. Then I want to see some retest of structure, price coming back into structure, retesting the structure as buyers not finding it easy to break out of the 134.700. And if this happens, then this will be a beautiful signal that we want to be going bearish. Then we want to be joining to the downside from there. And thank goodness the structure here has a tendency of giving us multiple entries, as a further breakdown of the 134.00 level will be welcoming additional position, and a further breakdown of the 135.600 level too as well will be welcoming additional position in that regard. So I'm hoping that we continue to the upside anyways, but if the breakdown happens, then we will have no choice than to anticipate a bearish momentum in this market. So these are my views here on the USDJPY for today. I hope I was able to simulate all the possible scenarios to look out for as we prepare ourselves for the New York session today. So it's on this note I want to wish you best of luck during the UK and the New York session today, and I hope that we be on standby to catch these opportunities as price action evolves in the direction of what we've talked about here during the live session. So I look forward to seeing you in the comment section as usual as we continue to monitor price action. Do have a wonderful day, everyone. I wish you best of luck, and bye bye.